I'll tell you why this is first visit fair value gap and nothing like over here. This is 931's candle. Why isn't that the first presented fair value gap? I'll explain it to you in a moment. Okay. So we open on 930 here. We trade up to consequent encroachment of the regular trading hours opening range gap and left no body near it at all. Okay. So we know that that gap, which is here, see how it's the high and the low of that? When we have that, what I'm watching is I want to see if price can get back up to the low of regular trading hours opening range gap. But not only that, I'm looking to see if it can prove to me. In other words, I'm doing a test laboratory experiment. Remember back in university or in higher order science, where you have your little microscope and your petri dish, and you're looking at everything, trying to see what the reaction would be. Well, that's what I'm doing here. I want to see, does price show a willingness to get above the consequent encroachment of that wick? Because if it can lay a body at it or above it, then I'm probably wrong, and they're probably going to want to continuously take it higher. Are we seeing that here? No. So what is it indicating? It wants to most likely go lower. So I want to see displacement lower, and it does. It shows it here. So when this short-term low right there is taken here, the fair value gap prior to that displacement at the downside. Why? Because 20% of the weekly range, TGIF, is in the cards. It's a potential. Okay. And also Friday's consequent encroachment of regular trading hours. So Friday morning's RTH ORG, okay, the midpoint or consequent encroachment, that's also a factor. That's there. That's right here. Okay. So in my mind, up here, I want to see, does it want to gravitate down to this today? But this is an afternoon target. This is something because only because of the climate we're in. If we weren't in such a heavily manipulated thing where even our own administration in the White House is, posting things that clearly even the average bear can determine that they're participating in it, or they're at least facilitating the end of the means, so that way people that are friends with them are doing something. Obviously, it's obvious that it's going on. And again, instead of arguing about and getting mad about it, Pelosi's been getting away with it for decades, and all the other senators got in on the action. So now that's why they're never going to do anything against insider trading. But if you and I were doing it, it would be totally different, right? So anyway, the draw is down here, and I'm looking for indications that we're going to likely go lower. So we took out that swing low there, and the fair value gap that displaced lower right before that's taken right there. I want to see this be treated as first presented fair value gap. But we have to ring in the caveat that we're at all-time highs. There's a whole lot of tomfoolery. I'm going to allow it to trade back up to regular trading hours opening range gap for today. Because if it can go up to there, then it needs to show a willingness to stay in the lower half of this wick. Why? Why would I want to see that? Because if this is bearish and it's the high of the session inside the regular trading hours opening range gap, price should never, like it didn't leave a body at or above consequent encroachment of that wick. Okay. This is a gap. This is how we interpret the wick. It's a premium gap. So think of this as a inversion fair value gap, and price was below it and going up into that. And we are looking at this as inversion. So let me put the color scheme on it so that way it looks a little bit familiar to you, and it'll make much more sense to you now when I show it to you like this. When we're looking at price, and I always show an inversion fair value gap in this color. So this is the color I use. So if we're trading outside of it and then coming back up into it, would we expect it to trade to consequent encroachment of that inversion fair value gap? No. So that's how we're interpreting, or at least that's how I'm teaching you how I interpret these wicks, that the best case scenario for entry is going to be at the midpoint, which is consequent encroachment, to the low of that wick. Anything inside of that is useful for an entry, looking for shorts. The first order of business would be, it needs to show no willingness to get up into consequent correction, not even for a wick now, because we've already done the business over here. We left it. Now we're coming back up. So it needs to stay really, really low. And the bodies were just blunt ended, which is really nice. It just shows that they have no willingness to get in there. Now, I already know some of you are thinking, I'm not so sure I would take that. That's okay. That's not your model then. But for some of you that want to trade turtle soup or climax reversal patterns or trading near the highs when you're bearish, this is how I do it. And I'm executing with it. So it's not like it's a, you know, we're not drawing the hypothetical long or hypothetical short position boxes on TradingView. There's actually buttons being pushed, okay? So if you understand what I'm showcasing, you don't have to be taking a short here. You could wait for further confirmation that we're going to trade lower. And I drew out this fair value gap and I had it colored already as an inversion fair value gap too. If you watched the execution videos on X this morning, I posted. So how you could use that is you may not have the conviction to want to get short here. And then once it starts to break down, that fair value gap right there, we would anticipate that becoming a premium fair value gap in the form of a buy side of balance, sell side inefficiency, changing to its inversion side. So in other words, use it as a catalyst to get short. And then again, over here, it uses it again. And if I had the opportunity to be in this watching it, I would have shorted it as it got there or very, very soon after it did it. It was really quick when it happened, but I would have went in there and executed on that too. But I just wasn't able to pull that off. It wasn't there. So I'm going to take this box off and leave it as it was. Okay. And then this small little gap in here, while it's very, very small, I was studying this while in the execution to see if this would afford me any further intel. It really wasn't all that helpful here, but it was something I was watching, which kind of bodes the case for the gap needs to be a little bit more significant than small little separations like this. So this is like a common gap, but nonetheless, you know, whether I annotate it in an execution, whether I ever mention it in tape reading with you live, I am always looking at these small little gaps to see if it can just lend a little bit more information. And you can see it really wasn't offering too much of detail for that price action in here. And then the sell side here, minor sell side, then I gave another area here where it was a little too smooth, minor sell side, and then over here. So that was the morning session objective for me. Okay, and if you watch the recording, I'm not sure if if you can see me doing it, but I actually have my target, the TP, take profit, was sitting right below here, and then I changed my mind after I laid down a couple different buy limit orders to take the majority of the trade off. I was thinking to myself, you know what, I'm probably wrong. I'm probably wrong, and they're probably going to want to take it down to Friday opening range gaps, consequent encroachment. And I know that sounds like, oh yeah, you're saying that now because it did it. But if you watch the recording, you actually see me take the take profit away, and then I had just the limit orders here. So which means that it would have done what? The the limit orders stacked between this low and this low here, they would have tripped and filled, but my position wouldn't be closed once we got below here. So that would have afforded me a little bit more room to capture a little bit more of a run. And then I made the decision that I don't want to do that. I just don't trust it simply because there's so many things that I'm weighing out. Like you as a trader, we're trying to figure out where Trump's going to run his mouth next on social media and what the geopolitical upheavals are actually doing over there, and what information can we trust? It's nothing. Nothing we can trust. So not only do we have to be good at trading and timing the market, but we also have to be good at trying to forecast when they're going to be doing something, like a fraudster would do, right? Someone's in control of the casino game. So that's the business for my objective this morning. I was looking for that, and then the market showed a willingness to drop here, came back up here. I spent a little bit of time adding more there because I felt that even if it were to retrace back here, it wouldn't be a concern for me because this would be reasonable. And if it did do it as it did, it would need to do it with one little wick event and then come back away from it. And you see it did that very thing. But by doing that, it created another wick there. So let me zoom in. And I know some of you are thinking, "This is really complicated." This was a very difficult day. To participate how I was participating, it was very difficult. It took a lot of focus, it took a lot of concentration. I doubted a lot of things that I was looking at in price. I was second guessing a lot of things that were going on. So I want you to know that you see that recording, and I'll pull my executions up in a moment, but you see all that stuff, and you're thinking, "Wow, man, he just must have been Cool Hand Luke today," and I wasn't. I wasn't at all. I was second guessing a lot of things. So it gets back to what I've been saying for weeks now, that trading right now is a little bit more difficult than the average market environment, even in my experience. It's a lot more to, kind of like weigh out. And, it takes more things for me to be convinced that I'm absolutely on side. So I'm constantly looking for feedback. I could have built this up a larger position today if it would have been a less if it would have been a more favorable market environment, not so much of the stuff we've been seeing lately with tweets and then the market exploding in the other direction. And then research shows that there was a big buildup of positions, one sided on a particular market. And obviously, you know who that is, right? So that's it's in the forefront of my mind constantly. So anyway, that wick here, see it? I'm highlighting it there. We went up and hit that there, and then sold off once more, created a sell sign and bounce buy sign efficiency. The bodies are staying in the lower half here, which is really good. You want to see that. And dives down. This one here, admittedly, I was very thankful that I had took, you know, a good portion of the position off because I was thinking maybe they're going to come back up and clean this up and then drop, and that would have stopped me from wanting to be participating at all the rest of the day. I would have been like, okay, I'm content. But it ran up into that inversion fair value gap one more time. Look at the halfway point, consequent encroachment. Boom, and then where's the body? See that? So we opened, went right back up, failed to get to consequent encroachment. When you see that, in your mind, you got to be thinking, okay, it's got to get really heavy here and start selling off, and it does that, and it smashes through another pool of liquidity. And this here, if I would have kept the idea on by removing the take profit just below that level here, I could have captured a little bit more, and it would have been this level here that I would have anchored to. And it went a little bit even further than that, all the way down to Fridays. Look at the bodies. This is Friday's regular trading hours opening range gap, consequent encroachment. I know it's a lot. It's a whole lot of word salad, right? But it's half of the gap for Friday morning with regular trading hours. Okay, so the gap midpoint was traded to here perfectly, and then we came all the way back up to pools of liquidity that was outlined this morning, and then we've been hemming and hawing back here, and now we're back inside that inversion fair value gap that I gave you from electronic trading hours.